Alrighty, guys, how's everybody doing today? Welcome to our weekly webinar. It's Sunday, April 23rd, 2017. Appreciate you guys all being here today. So we're going to be going through all of these pairs that you guys see here to the right. We're going to be looking at the economic calendar. First and foremost, though, if you guys are here for your first time tuning in, welcome. My name is David Schinkel. I'm the CEO and founder of Positive Traders. I hold these Sunday webinars every Sunday, so you guys can get an outlook on, my opinion on the markets. As always, my little disclaimer is that these are just kind of my views on the market. Okay, take it all with a grain of salt. A lot of what I'm going to say doesn't necessarily mean it's going to happen, tonight over the London session. I know a lot of people that do analysis are looking for, to enter a trade right away or short term. And there may be possibilities to take a trade, during the London session, today or tomorrow, based off my analysis. But this is pretty much just my opinion, my views of the overall week. As I did mention in the, the little announcement for everybody to join today, that we're going to be looking at two setups specifically. So make sure you guys stay tuned for that. Those two pairs is going to be pound dollar. We're going to be looking at a trade setup on pound dollar, as well as a trade setup on New Zealand dollar, US dollar. So those are two setups we're going to be looking at, as well as we're going to start off, before we even look at the news, we're going to start off and talk about these gaps in the market right now, why they're happening, okay? So if you guys don't know why the market's gapped like they did, you guys can see right here, the market's gapped over almost 200 pips. All right. In a nutshell, it's from the French elections that are going on right now. So if you guys are unfamiliar with that, that's happening right now. Definitely, make sure you guys are aware of that sort of stuff. If you aren't really sure how it works, read a couple like articles, read some like news articles, get kind of aware of what's going on. But overall, long story short, I don't want to confuse you guys too much, but just so this makes, or, talk to you guys too much about this and bore you guys to death. But pretty much I'm just going to just sum it up like this and spend like 2 minutes talking about this. There are two contenders pretty much right now in the French elections. There's a gentleman by the name of Emmanuel Macron, and there is a lady by the name of Marine Le Pen. All right. And pretty much the reason why the market's gapped up is because right now the elections are looking really good for Mr. Macron, and pretty much like his background, the reason why that's good for the euro is because pretty much, to put it simply, is because Miss Le Pen she's kind of like, she's a far right. Okay. She really wants to potentially leave the European Union. Okay. So like last year when there was Brexit, there's potential talks that if she gets elected, there could be like a Frexit, which is like France exiting the European Union. So which the citizens aren't too keen on, which of course that's going to weaken the dollar or weaken the euro a lot, right? Just like with the pound, when there was Brexit, that affected the pound negatively. So we're seeing Macron, who also he's never held elected office before. So he's really open to new ideas. He's more of like a centrist, more of like a people's person. So they're more for him. And so that's going to be better for the euro. So pretty much, guys, you can expect that this isn't guaranteed, but pretty much if Macron wins, we should see a rally in euro dollar. Okay, we should see the euro strengthen quite a bit. And if Le Pen wins, we should see Euro USD fall. Okay, Euro start to weaken a little bit. So that's just kind of like my overall thoughts and commentary on the elections and why they gapped. Let's go ahead and just jump straight into our weekly analysis. So as usual, we always start with our economic calendar on these webinars. So this week, not a whole lot, right? There are some red folders throughout the week. There's some Australian dollar news. Actually, tomorrow and Tuesday, there's some banks closed around the world, central banks closed. Wednesday is pretty much Wednesday and Thursday are our two key days this week. You can see Wednesday, there's a bunch of news for the yen. Okay, they're going to be having their monetary policy statement. They're going to be talking about their interest rates on Wednesday for the yen. This is going to be a pretty big market mover for the yen. And then Thursday we have some dollar news in the morning. We also have a European press conference in the morning, but we have unemployment claims and core durable goods for Thursday morning. Friday, nothing really. All right, not a whole lot on Friday. Just a couple pieces of news. We have some GDP for the pound and the dollar, just a little. So it's kind of sporadic this week, just another standard week, not empty, not a whole lot. So today is going to be pretty light on the market commentary because of the market manipulation that's taking place right now. If you guys aren't aware, the French elections are pretty big. There's a lot of brokers that are changing their margin side, or they're changing their margins and their leverage. So that way people are getting margin called faster. So they're like lowering leverage, temporarily. There's a lot of basically excuses for market manipulation. So you guys know, usually I spend like a couple minutes on every single pair. I'm pretty much going to be grinding through, give my overall opinion in a couple seconds or so on all the pairs except for pound dollar and New Zealand dollar. And we're really going to be focusing on the probable setups right now rather than just talking about something that we aren't even going to trade anyways. So gold looks like it's seeing a little bit of resistance. Now, it really depends on what happens here. If we see the dollar continue to weaken, then we're going to see the gold continue to rally. Gold could break its resistance, but the reason why I'm not really interested in trading, Euro USD and gold and dollar index and USD Swiss franc, they all kind of correlate to each other in some way, shape, or form. So I'm not interested in trading any pair of these top four pairs or indexes or commodities, just because we're at really significant levels, right? Euro USD broke out of this major wedge, and we don't know if this is a fake out. We just shouldn't even be trading. This is just my recommendation. I wouldn't even be trading the euro until these elections are done. I wouldn't be trading the USD Swiss franc. I wouldn't be trading. Really, I'd just be looking for like other pairs right now to be trading, but I'd be staying away from like European pairs, at least like around France. So like the Swiss franc, the euro. I think pound dollar is still okay to trade. Obviously, New Zealand dollar is still okay to trade. Australian dollar is okay to trade. But there's just a lot of confusion in the markets right now. Just a lot of excuses for market manipulation. So these top four things, gold, the dollar index, Euro USD, and USD Swiss franc, not interested in trading whatsoever. I want to see what sort of structures they start to form, see if these are fake outs. We can already see that these gaps are starting to close in the beginning of the week. So I just kind of want to see what happens. Pound dollar, you can see why this is a potential trade setup. So we're going to go ahead and look at this on the daily. Pound dollar is pretty bullish. We're really starting to break this sideways pattern that we've been in for a while on pound dollar. I personally think a buy stop above current highs is a good risk to reward to trade. Okay, we've got a nice bear flag going. Bull flag going. And then also, overall, this should follow the general direction of Euro USD. And if you guys have been keeping up with the French elections, Mr. Macron, okay, he's favored right now. That's supposed to be good for the euro dollar. So should send pound dollar up as well if we continue to see some movement. But I'm just looking at this from a pure technical standpoint. We can see a nice bull flag forming. That's pretty much it, though. We're keeping our analysis simple. The weekly, super bullish, super bullish. So just lots of price action based on the candlestick. Look at that on the daily too. Really nice bull flag. So lots of price action to the upside on pound dollar. So I think that's probably, especially with a crazy, beginning to the trading week like this, I think pound dollar is, since all the trades that we've, all the pairs that we've gone through so far, I think this is our best opportunity. Pound yen is probably going to continue moving higher. We can see it on the weekly, nice bullish engulfing candle last week. All right, it'll probably follow with pound dollar as well, with a stronger pound moving up higher. But I'm on the sidelines of pound yen. Not any of these pairs that really had a huge gap at the beginning of the week, I'm not interested in trading right now. So that's why we've we haven't had much to say on, this pair and USD Swiss franc and Euro USD and gold. They all gapped pretty tremendously. Pound dollar, we look at pound dollar, there's not really a gap, right? Not, and if it's actually closed, if there was a small gap at the beginning, actually there wasn't even really a gap. Couple pips. Anyways, USD Jappy. Not interested in trading this pair. Now, here's something really interesting. I'm sure a lot of you guys are probably noticed this too, is now this, of course, has to do, and it's only interesting if you don't really know all the facts of why it's happening. But if you know that it has to do with the French elections, then it makes sense. But USD Jappy, did you guys notice how it gapped up, but Euro USD also gapped up? That's like a little interesting, right? Because you'd think that if Euro USD gaps up, you'd expect to go look at USD Jappy and it drops super hard, right? Because you'd think that the dollar was affecting these pairs, but it's the French elections that are affecting these pairs, not necessarily the dollar affecting it right now. So that's why with this confusion and this market manipulation, I'm not interested in trading something like USD Jappy right now. It just doesn't look very good. And again, it doesn't fit in my criteria of all the other pairs that have, for me to be interested in trading them right now, they can't have made a huge gap, so we're just ignoring this one right now, moving along to the next one. We're focusing on what works. We don't want to get cluttered and sidetracked with all these horrible looking charts. We want to focus on the charts that do, the pairs and the charts that do look the best. AUD USD as well, same thing. Not really interested in trading this pair. Overall, I think it's going to continue moving up. But it's, again, it had a huge gap towards the beginning of the week. It's being a little sporadic, not really interested in trading this pair, but I do think it's going to move to the upside. For me to be interested in getting in on this pair, taking a position on AUD USD, I would need this resistance to be broken. Okay, this resistance or some sort of formation down here showing that like this is just a little retest of the gap, or it's just closing the gap and it wants to continue higher. But my overall bias would be to the upside on AUD USD, but not too interested in trading it. Now, NZD USD, on the other hand, I am interested in trading it. So again, if you guys are just tuning in, two pairs that I'm interested in getting in on this week right away not right away, but I have my eyes on, at least, are on my watch list, if you will, for the week or beginning of the week, is pound dollar. We're going to go back over that at the end to do a little recap, and then New Zealand dollar, US dollar. So this pair should be pretty simple to most of you guys of why we're looking at taking this position. It's coming up to a pretty significant area where it's seen some resistance at before, not only on the 4-hour, but the daily as well, like you can see right here. So, this is just in my opinion, this is a really clean setup. If you guys have not, this is just your basic, some people call them W's, some people call them whammies, some people call them, it's just a reversal pattern. Okay. So you have this little W right here, and then you have the previous resistance of, that original pullback. So if that's broken, we're going to be looking for movement to the upside. We're going to be looking for it to come to the upside. So I think that those are two great clean setups this week. So New Zealand dollar on, to the upside, and pound dollar to the upside as well. So, don't focus on a million different pairs right now. Just keep your eyes focused on those guys. USD CAD, not super interested in trading this pair right now, just because let's look at it on the weekly. This trend line, this trend line has been haunting us for so long. This trend line we've had on our charts, since down and around this area, we've had this trend line for a really, we've had this trend line on our chart since last year, guys. So this trend line goes all the way back to 2014, middle of 2014. So I don't like that we're underneath the trend line in a little bit of a bullish movement, right? Because some people could say this is bullish, right? Some people could say this is bullish depending on how you look at it. It's definitely, obviously, it is making a series of higher lows and higher highs being made. So it is inching its way up. I know we had talked about this a few weeks ago, this channel that had gotten broken. So there's just a lot of, some people might not even call this going up too much. They might consider all of this just a little bit of like a sideways consolidation right now, or a channel, if you will. So and the weekly has a nice bullish engulfing candle. So it's going to be interesting. And another interesting thing too is this right here is the level that we're getting up to. This is why it's interesting. I forget that you guys don't always see everything on the charts because sometimes I delete some stuff. So this green box represents the 50% retracement level of last year's high and last year's low. Okay. So you can actually see we have, our high of 2016 to our low of 2016. So last year's high and low fibbed out. It's been rejected at the 50% retracement level multiple times, right? Pretty much 3 times. You could say 2 times, definitely, and then a third time it got near the zone and started to get rejected. So it's going to be really interesting to see what happens around this resistance, especially with last week's weekly candle being so bullish, and potentially the dollar picking up strength. It's just it's a little bit difficult on what to say is going to happen. But I think that if I had to just, gun to my head, I had to like pick a direction, I would have to say that there's a lot of selling pressure at this 50% retracement level. So I don't think that we're going to go like straight up or straight down. I think that, we could see a little bit of like consolidation, kind of like staying in this range for, quite some time. So again, let me go ahead and do a recap. If you guys have any questions, go ahead and, let's see. Sheldon, you said USD CAD will double top on, you said it will double top on the weekly. Interesting. Yeah. I mean, we'll see if we do get if we top in this area, if this week is bearish, if we see any sort of selling this week, then that's going to give us some pretty good signals to sell next week. But if we see any sort of bullish momentum, if we start to see, like if this weekly candle ends up breaking this previous resistance, and we'll be looking to buy, but I don't think it's going to just break that easy. We've seen quite a bit of selling pressure at that area, like the 136 area. So anyways, quick recap, guys. And I'm just trying to think, is there any announcements for the week? Not really. You guys just be careful this week with, the French elections. We have a couple of pieces of news this week, I think, what was it? Wednesday or tomorrow Wednesday. Wednesday is the yen. There's some heavy yen news, so just be aware of any of the heavy news that's coming, high impact news that's coming out throughout the week. But one more quick recap, and then we'll go ahead and finish off. So these are just the 2 pairs that I think that are the best opportunities to trade this week so far that I see right now. That's not to mean tomorrow night there could be some sort of price action set up for another trade, right? I'm just saying, like, right now, as of right now in the markets, these are the only really 2 solid trades I see. New Zealand dollar to the upside. How to trade this, okay? How do we trade this? Big question mark. How to trade this, okay? Because I said it's good to the upside, but how do you know when to get in? All right, this is what we're going to be looking for. We're going to be looking for these highs to be broken, okay? So you could basically like set an alert here. If you guys use TradingView, you could add an alert, and you could literally just have it send you a text. Like I'm going to do it right now. I'm going to click create. Now I'm going to get a text on my phone once price breaks through this area. Okay. Now, once I get that text, I'm going to be like, okay, cool. I'm going to go ahead and pull up my charts. I'm going to be looking at it on the 4-hour charts, and I'm going to wait for that 4-hour candle to close. Okay. Because that 4-hour candle might have just opened. It might have 10 minutes to go. It might have 2 hours to go. You don't know. So you need to wait. Just because it crosses that area doesn't mean instant buy. Okay. Because it could create a big exhaustion candle, right? There could be like a giant wick that ends up forming. And then it ends up looking like a sell at that point, and then you end up screwing yourself over. So wait for the confirmation, and that confirmation is once you see this level broken, you're waiting for a 4-hour candle to actually close. You want to see the body of a 4-hour candle close above these highs. Once you see that happen, then you pretty much use your own judgment to get in. You decide what sort of risk you're going to use. You decide where you're going to be targeting. You decide where you're going to put your stop loss. With a trade like this, I'm probably going to be putting my stop loss somewhere, down in this area with, so like about like a 50 pip stop loss with about a 50 pip take profit then. And then, my second take profit is probably about 100 pips at that point. So pretty simple on how to trade these breakouts. If you guys haven't found out by now, I like trading a couple different strategies. I like trading, all sorts of different, I know how I'm versed in a, multitude of strategies, but one of my favorite ways of trading, because it's not necessarily easy, but it's like, it's I hate to say it because, trading isn't easy, but it's more like brainless, right? It's like, once you know what you're looking for, you just look for the same thing to repeat. And that's, breakouts, right? That's like flags and things like that. So, perfect example is on this pound dollar trade. So just recapping, this is our second best trade that I think we're looking for and you trade it very similar to NZD USD, right? You're looking for that high to be broken. So some people might say, well, David, is your high right here, where it actually was the high, or is it like at the high of the structure? Well, that's up to you guys to use your judgment. Me personally, I'm probably going to use like, call my high like right here, pretty much kind of where the majority high is. Like if I took an average of where the high is, it's probably going to be like right in like, oops, meant to do a little line, like right in this area. That's probably gonna be like the medium of like the high and the low. So I'm waiting for that to be broken. So that means I'm going to put, you can actually set an alert on a line. So I'm going to set my alert on that line. You'll see a little timer pop up next to it. Boom. So now we know we have an alert set. So once that alert is triggered, it's going to send me a text. It's going to like send it right to my phone and say, hey, David, price is crossing 128.5558. And so I'm gonna be like, okay, great. I'm going to wait for that. And then I'm going to wait for that 4-hour candle to close. If that 4-hour candle's body does not close above this level, then I'm not interested in taking the trade. Okay. Pretty simple. And how do you set up trading view alerts? Really simple. Go sign up for a free account with them, and then go to account or profile settings, one of those two, and it'll be right in there. You can just put in your phone number, or you have to like put in your carrier's phone number, like your phone number at verizon.com or whatever. It has a template for you. It's very easy. It takes like 2 seconds to set it up. And if with a free account, you can set, I think like 2 alerts or 1 alert for free. I'm on like their pro, so I can set like 10 or I don't know, as many as I want for free or something like that. But you really only need 1 at a time. 2 at a time is handy. So we're going to have that on both these. So that's the recap for the week, guys. That's how we're looking for these trades right now. All right. So NZD USD to the upside, wait for that top to be broken, wait for a 4-hour candle to close above it, then look for a buy. And then also, just to give you guys an idea of where you could target on a long-term, So let's look at NZD USD real quick. So we're talking about buying because of our structure on the daily, right? So if we're looking at structure on the daily, then we need to be looking at targets on the daily. Makes sense. So, pretty much I'm going to be looking for, if price were to break this area and start moving up, where is it most likely to see some resistance at? Well, if you have a trained eye and you have pretty much any market experience, you could say something like that right here, right? That could be our next resistance. So you could be targeting that area, like the 7160 area, which gives us a really good risk to reward, right? Because if we're getting in at a break of this resistance, which is basically 70.50, and we're going to have our stop loss around 70, all right? That's a 50 pip stop loss. And if we're targeting about 7160 area, then that's 110 pips that we're aiming for to risk 50 pips. So that's a little bit better than a 1 to 2 risk to reward. So that is NZD USD. That's kind of like my full analysis on it. And then, I might put this a little bit lower even, it really just depends, kind of this general zone. Once price gets to this general, and then you could even take it a step further, right? You could even go ahead, and I'm just not even using all the resources because I like to really stick to just price action. But some people might even fib this out and say, okay, hey, is there a level that corresponds on the daily? And you kind of you don't really have much to work with, right? You have it's in between a couple different levels, but you could say, okay, hey, it could go all the way up to 7160, but maybe around that 50% retracement level, which also happens to be, you guys see that moving average right there, the 200 moving average, okay, 200-day moving average. that potentially could be a P or a Z as well. That could be an area where we start to see some resistance at as well for a reversal. So you have a couple different targets, but that's just some rough analysis, and that's that. And guys, just so you guys have an idea, this is what I do every single day in the premium group. So if you guys are a premium member, Monday through Thursday, I hold a webinar and we go over, analysis like this. You guys get to, so instead of just doing one for free, you can get pretty much 5 a week and signals. So, and then pound dollar, just so you guys can see, okay, where might we set a target? Well, this one's a little bit more difficult because we're working with a lot, like it's going back a lot farther, okay? Our next level of resistance is going back a lot farther than we are with NZD USD. So it's a little bit more difficult to say in this area, but, I might be targeting, if this is the 130 area, then rather than using something really far back that might be, not as helpful, because if you look at this is like the 75 level, that's like 500 pips higher. Realistically, we aren't really looking for like a 500 pip target right away. So you might be able to use like a fib extension rather than a fib retracement. And if you guys aren't familiar with fib extensions, that's where you're looking for the extension of a fib, once it's been fully retraced. So we can look at this flag and we can fib out the top and the bottom of this flag. And now we have a couple different like invisible levels of where price could potentially see some sort of resistance. And if you guys have been trading for any amount of time, you guys should be very familiar with, at least the 160, at least the first extension level. I mean, there's obviously custom extensions. These are just the standard ones, but the 161.8, the 261.8, these are two pretty standard Fibonacci extension levels. So from there, you have your targets. Once it breaks, you don't have to keep the Fibonacci there, right? You could go ahead and just, put your 2 lines right here and just know, okay, obviously the bottom one is a less of an extension, so that's 161.8, and top one is a bigger extension, so it's 261.8, and now you have a couple different levels to play with. So that's, I just wanted to give you guys a couple minutes of picking my brain, giving you guys an idea of what how I do my analysis. I don't just, I really do. There is a method to my madness, right? It's not just taking blind trades, not just, it's we have reasonings and cognitive reasonings that we can actually write down on a piece of paper of why we're entering a trade or why we're targeting an area. Why is this your take profit? Why is this your stop loss? Instead of just, I feel like it's going to go in this direction. This seems like a good take profit. This seems good, like a good stop loss. No, we have cognitive reasoning behind that. So that does it. I'm done talking your guys' ear off. I hope you guys can make some money on the New Zealand dollar trade and the pound dollar trade. And I hope this analysis has helped you guys. If you guys are watching this recording on YouTube, go ahead and smash that like button and leave a comment if this helped you guys out. Or if you have any questions, follow our Facebook group. And guys, make sure you guys follow me on Instagram. I haven't been doing it too much just because I've been, markets have been a little bit slow lately. But this week, you guys can tell energy is a little bit picked back up. And I'm going to be, broadcasting my trades a little bit more. If you guys follow me on Instagram, it's at David Schinkel, just my first and last name. I actually will post, what do they call them? Like the Instagram stories, right? So when I get into a trade, I'll go ahead and post it on my stories. So if you guys happen to be scrolling through Instagram and you see my update, boom, maybe you guys can get in the same time I get into. So make sure you guys follow me on Instagram. Other than that, as always, what I always preach is above everything, risk management and patience. Okay, you don't have to make money every single day. You don't have to jump into a trade every single day. And most importantly, you don't have to flip your account in a week, okay? Aim for 5 to 10% growth per month and risking 1 to 2% per or less per trade. If you have the capital, you have the money, you can risk 0.5%, literally 0.5% on a trade and still be making money in Forex. So don't get distracted by those fake demo beasts and those demo people out there, posting fake screenshots of having $1 million weeks and things like that. I literally see it. It blows my mind, guys. I literally see a guy posting on Facebook or Instagram, he'll be taking 100 lot trades, right? And you go through the guy's history. He just got into Forex, right? He hasn't started posting any Forex things until 4 months ago, and now he's trading 100 lots, right? And you still see 4 months ago he has pictures of him or whatever. His social media shows him not even in Forex or anything. Do you like, and then the crazy part is I see people like following this guy, like kissing his feet and stuff like that. Like, and it's just crazy. Like people are so brainwashed, to get rich quick or, but that's not the way trading is. You get into trading thinking Forex is get rich quick. You're going to be out before you even knew what was good. So anyways, guys, that's it. Hope you guys enjoyed this information. I'll go ahead and upload this for you guys, and I will catch you guys in next Sunday's webinar and in our Telegram for some free trades this week. So see you guys later. Have a good week.